Morning. Hope you are having a nice weekend. So today I was preparing my charts for tomorrow. I was looking at Nifty and Bank Nifty, and suddenly an idea flashed in my mind. Why don't I make a video to my all the viewers, subscribers, and also for my students? And because if I see Nifty and Bank Nifty chart for the last this week Friday, I can see all my chart patterns on the in Nifty and Bank Nifty. So because once you start identifying chart patterns easily, then your trading will be a lot of easy. There will be no question of like uh, any difficulty in the trading. So and I thought I would to share my knowledge like how I keep my trading simple. So this is our this week Friday's Nifty chart, and this is our this week Friday's Bank Nifty chart. And here, if you see what in the this week Friday, I took my first trade in this M pattern here in this 940 candle. I have taken my first trade. I had explained in my end of day video also like why I took this trade. Before that, I would like to tell also that when you look at the chart patterns, every candlestick movement is there is some reason behind every movement. If you see market on this week Thursday, it gave a nosedive. Suddenly, you can see such a big red candles, and suddenly it stopped here and it started reversing from here. Why it reversed from here? You should think and you should analyze. You have to analyze what you have to do. You have to go back to check why it has reversed exactly from this level. If you see here, there is a nice consolidation zone where market was stuck for almost more than 1.5 hour. Just a minute. Where market was stuck for around almost 1.5 to 2 hours. So this is a strong consolidation zone where buyers and sellers were fighting like to decide to take market in which direction. And if you are my student, you know very well that when the market start consolidating, we just avoid this trade because this is not good for the option buyer, and this is helpful for any option seller only. So that is why in this consolidation zone, we exited even our trade also. We had taken this trade, and this same consolidation zone acted as the support for this week Friday, Thursday. The same time when market opened gap down, obviously the thing which was acting as a support now it will act as a resistance. So we decided to take a trade in Bank Nifty for the M pattern. And if you see here, at the same time, it has made a nice inverted head and shoulder also. So how I decided this inverted head and shoulder? If you see after this M pattern, it went to all the way to day's low before going down. It made a curve like this, and again it made a curve half ball like this, and then again it made a nice half ball or curve made a like this. So this is easily visible to our eyes, guys. So there is not much there. You don't need any indicator or you don't need any moving averages, this, that, and all. It is easily visible to your eyes. So this is this is how like we identify our charts. So, but this trade was not recommended because, as I explained, here there was nice resistance, and also days high can also act as a resistance. And this is how, like, before jumping onto any trades, you have to do some analysis also by traders because if trading is purely based on some chart patterns, and if you start taking trades blindly, then I would have not be making any videos like this. Instead of that, I would be bringing in all the money from the world and putting in one chart pattern, and I would have been making hell lot of money. But this is not like, it is not like that. We have to do some analysis also before jumping on to any trade also. And coming to Nifty, I just wondered, like if you see, I have missed one trade on this week Friday actually. It was such a simple trade because when I started my analysis, if you can see here, Nifty has made a nice this inverted cup and handle. If you see, it has made like this one nice cup and handle. And when it opened here, we could have taken a trade. Our SL, actually SL, keeping SL here is a big SL, but in such situations we can take a nearby some swing highs or swing lows. So in this case, I would have kept my stop loss somewhere here. Like it is also like a previous day closing is here. So I would have kept somewhere here my stop loss above the previous day closing. And this trade, in fact, if you see, as per rules, it has hit our target also. Just I will show you. See here, it has given our target also easily within no time. So it's okay. This is, if you see this on the 15-minute chart, you will see more. And if you see our today's, our this week Friday's second trade was in a gap opening strategy. So I will just explain how I was thinking and how I took this trade, second trade. So you know my gap opening strategy. There are some rules in my gap opening strategy, like Nifty and Bank Nifty have to open with some certain points, either gap up or gap down. After opening the gap down, what market made? Market made a sudden move from top from days opening to our this resistance level, which I share on a Telegram channel every day morning for free of cost. And exactly at the same level, it made a it took some resistance here and started consolidating. And what I was thinking, frankly, I will tell you how I identify my chart patterns. So if this was a sudden move, okay, and if this had made some given retracement around this level, 18,730 or around 740 or around this level, then I would have definitely drawn my three lines for the W pattern. Since in case of my W pattern, if you see, if you know, it should give a one-sided move to till some resistance, and if there is some retracement, then we draw our three lines and we take entry for our W pattern. So, but it didn't have, it didn't give any retracement and made a big red candle here, kind of engulfing candle also you can say, but not based on this I take trade any candlestick patterns. But if you see here, there is some consolidation and also this candlestick made gave me feeling that okay, now today I think it is not going to be a W pattern day. So I thought now it may give it now the second option like second what can happen is it can give me gap opening strategy uh, trade. So what I did, I'm just drawing this Fibonacci to show you, just to explain you people, but just because see if you see as per our gap opening strategy, market opened gap down with certain points and made a swing low and consolidated below 50% level. If the consolidation is above 50% level, any breakout above we go long. If the consolidation is below 50% level and any breakdown below the day's low or swing low, then we go long short. So this is where I decided to jump onto my second trade and I took my second trade for the in shorting Nifty here. So this is how I think traders, and if you see again it gave a strong down move, yeah, sudden move, and after this also again I was thinking for the W pattern when it gave a retracement up to here. I had drawn three lines. Now I have deleted since I could not get the trade, and my ambush entry line was somewhere here. As far as I remember, if my memory is good. So I was waiting for the entry around this 18,650 level to take a trade for the W pattern. I was waiting for the retracement till this my line, but in fact market did not come. And after making such a curve, gave a small retracement, and when it started going up, it is clearly visible to our eyes, guys. So this is our cup and handle pattern. Again, this trade is not recommended because as I said, we cannot trade all the patterns blindly. We have to do some analysis also. You can see here there is some small consolidation. This was not such a big consolidation like we saw in the bank nifty. Small consolidation, but that can act as a support and resistance for the day. So traders, this is how I keep my trading simple. You don't have to be like a very uh, sticking to screen all the time. You just keep watching the screen every 5 to 10 minutes or 15 minutes once also. That is fine. You can take the trades and also you don't need any indicators. What are indicators, traders? Actually, indicators are nothing but are driven from this price only. This price movement only data goes to indicators. There are many indicators, like there are many people selling courses saying that this is a leading indicator. Some people say some are lagging indicators. You don't need anything, let it be leading or lagging. All are purely driven from the price. Bhav Bhagwan hai. ऐसा बोल, you know, right? That is a standard dialogue in stock market, and this is how like price is superior, like price whatever the indicators, let it be leading or lagging, all the indicators are driven from the price movement. And with our this simple price action, you can jump onto any trade before any indicator gives a signal. And also you have to remember that in like trading, risk reward is also important, which I also teach my all the students in my webinar, how to take how what is risk management, and what is the risk management one should how to manage the risks and all. So if you are interested in joining my webinar, students, so you can log into my telegram channel. Can join my telegram channel. The link is in the description. So you can join my telegram channel where you will find the details, and you can contact me accordingly. So thank you all. Thank you. Hope you are having a nice weekend, and all the best for the next week.